Tesco negotiates troubled financial waters. Thank you for joining us for another Bank of Cardiff newscast. If you witnessed a meteoric rise of British grocery giant Tesco through the 90s and noughties, you would be forgiven for thinking that only a global disaster of outlandish proportions could halt this retailing Leviathan's triumphal march. Well, Tesco has announced that the black hole in its first half profits is not only bigger than anyone thought, £263 million, but some of it also stretches back a good deal further than anyone imagined, certainly beyond the current accounting period. The Deloitte report will now be passed to the Financial Conduct Authority for further investigation into how this monumental blunder happened in the first place. It is a savage blow for a company already embattled by tough market conditions that have led to falling sales and sharply reduced trading margins. Tesco's ascendancy began in the early 90s when a program of expansion and retail innovations, including the launch of the first nationwide British loyalty card, propelled it to the top of the supermarket league. By 2005, profits had topped £2 billion. Tesco's position seemed unassailable. Things started to go wrong for Tesco with its planned expansion into the US market. The launch of 200 Fresh and Easy stores in California, Nevada, and Arizona in 2007 should have been auspicious. Tesco had embarked upon years of research, even going as far as having their staff stay with American families to observe their shopping and eating habits. And yet, they still managed to get it badly wrong. It didn't help that the recession was beginning to bite in the western states, or that the company had to build a massive support network before they turned over a dime in order to make their large-scale business model work. But the fact is that Tesco simply failed to tap into the cultural zeitgeist. They fell into the gap between Trader Joe's and Whole Foods and could not climb out. Turns out that despite their optimism, the Fresh and Easy offering was neither fresh enough, lots of pre-packed fruit and ready meals, or easy enough with an unfamiliar self-checkout system to tempt shoppers away from other stores. It was a disaster that cost them over £2 billion over 6 years when they finally called time on the business in 2012. The retail landscape has changed dramatically in the UK over the last few years. Where shoppers used to be happy to take a once-a-week trip out to an out-of-town megastore that had acres of choice along endless aisles of branded goods, they're now in pursuit of the twin goals of value and convenience. German discount operators Aldi and Lidl have snatched the commercial advantage from the big four UK supermarkets, which are Tesco, Asda, which is part of Walmart, Sainsbury's, and Morrison's, while they were busy competing with each other, seriously denting their profits and sparking an unprecedented price war. Well, these are turbulent times for retailers, and Tesco must feel at times as if it stepped through the looking glass. All the certainties that underpinned supermarket expansion plans, that bigger was always better, and people would stick with familiar brands and buying patterns, have been comprehensively washed away. Savvy shoppers are embracing discounters with open arms. Aldi's agility makes Tesco seem bloated. Aldi has already 500 stores in the UK and is planning to double its size over the next 7 years. It has 1,000 stores and is growing at twice the rate of other similar retailers in the US, where it shares parents with Trader Joe's. In contrast, Tesco is scaling down its expansion, especially into huge out-of-town stores, and has mothballed dozens of projects in recent months. So, what next? Tesco Chief Exec Dave Lewis is understandably keen to move on from the accounting debacle. He said he wants to draw a line under the issue and has pledged to begin the long journey of rebuilding trust and transparency in the business and the brand. But it's a big task. Warren Buffett's Berkshire Hathaway investment company has just sold 245 million Tesco shares, reducing its holding to less than 3%. The holding, described by Buffett as a huge mistake, was worth around £1 billion last year, but lost half its value as a result of the recent troubles. It will be interesting to see how ripples from the Tesco situation affect the rest of the market. Stock analyst Neil Woodford said that the immediate future is going to be very tough for the sector, but particularly for Tesco. That's all for now. Join us later this week for another Bank of Cardiff newscast. And remember that all our newscasts are available on our website, bankofcardiff.com/newscasts.